And today on the Game of Loans podcast, I'm absolutely delighted to introduce Adam Lawrence. Adam is a property investor in his own right, has a lot of history of dabbling in a few different things, and is currently one of the founders of probably my favourite property networking event, although I might get told off by other organisers for saying that, Partners in Property. So Adam, thanks so much for coming along on this Sunday evening. Did you want to sort of introduce yourself and give everyone a bit of a background on who you are and what you do?
Sure thing, Sam, and thanks for having me. So as you said, yes, co-founder of Partners in Property, which we founded in Birmingham in 2017 and have now got 5 meets across the country, although we're currently running all of those online, obviously, with the current situation, and are looking at trying to deliver more online content, as you can imagine, to try and reach out to all of the community that we've built and keep everybody on the right lines, really, as much as possible. I have a background which is pretty non-vanilla. I mean, my corporate, or not really corporate, because it's mostly small company stuff, background was in wealth management. So I used to build portfolios for the very wealthy and really try, obviously, to keep things ticking over in the good times, of which is usually about 2/3 to 70% of the time in any stock market is a pretty good time. It's the other 1/3 that's the issue. And now, of course, we're in the 3-4 sigma event away from the mean in the bottom of a really interesting, or not necessarily the bottom, but on the way down in what's going to be a really interesting year for the stock market, probably the craziest year for the stock market in recent memory. So I built portfolios that were supposed to withstand things like this, that were very well diversified, not just in stocks, use some real estate funds to do that as well, cash, different hedging instruments. And other than that, I have a history as a trader, as a sports arbitrage trader. So that was basically making bets on sporting events, putting myself in a position whereby it didn't really matter what the outcome of the event was, I would win money either way. So that was quite entrepreneurial, very, 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 very fast moving. So you would get opportunities that would open up that might only last a couple of seconds. On a bigger scale, you might get short-term windows open up where a new thing came out or something happened, or people started betting, the market changed and people started betting in different ways, and those opportunities could last anything between a week and 3 or 4 years if you were really lucky. So got very used to the management of change, got very used to the financial side of things, and also I did my first degree was in philosophy, politics and economics, so the same as Boris Johnson for my sins. Where I majored in economics. So that was between 97 and 2000. And then I did a master's in business administration at Warwick Business School. I did that was a full-time course. So the economics module for that I did in 2012. And I also took a couple of other modules that were economics based, which was super interesting because basically what they said was forget everything you knew before 2008 because the game is different. And here we are today, probably about to see us be told to forget everything we knew before 2020, maybe as we come out of this. But obviously, that's what today is hopefully about, demystifying some of this stuff as best I can.
And I mean, it's safe to say you're not bad with numbers, really, which is exactly, you're absolutely right. Trying to demystify a few of the bits and pieces that have gone on. I think as much as there's been a lot of talk on social media and that sort of stuff about all the stuff the government has done, and it has divided some people, but I think collectively most of the time it's pulled us all together, which I think is a positive. But really I wanted to have this discussion with you today, Adam, because I think you're really well positioned and you understand the implications, I suppose, of a lot of the things that the government have come in. So I think that it started off, I suppose, with some help, should we say, quite a widespread I suppose a number of support that came in for employees to start with, those that were employed. And I think it was received pretty well, and the government were praised, I suppose, for acting quite quickly. And I know I've seen some posts from yourself that were quite supportive of that. So I thought maybe we'll kickstart with that. And how you think that's, it was obviously a good thing, but how good was it, and how good, and how's that going to help our economy, I suppose, moving forward?
Sure. So I think just as a preamble to that, maybe we just briefly touch on the fact that the government had then before that come out and offered up to 330 billion in support for loans to businesses via a coronavirus business interruption loans, which, as things play out, doesn't look like it's that sort of money in any way that's going to be accessed. I mean, we have to bear in mind, we have a tendency in our own social media bubbles and stuff to talk to one-man bands and micro businesses, really, although we do know some fairly large players for one-man band situations. They're not big companies. So that loan scheme was targeted between 20,000 and 5 million quid. It sounds like it also used an existing scheme rather than coming up with something completely new, which was obviously the logistical operational implications of all of these things is important at the moment. But from everything I've heard so far, people are being offered loans at 17% interest, and they're having to sign personal guarantees, although there's a few lenders not asking for PDs. So that looks like one of the white elephants of the whole thing so far, really. But we were coming off the back of a positive that has to be seen as a positive, or had to be seen as a positive at that time. We were coming off the back of 2 cuts in the interest rate down to now the new low that we've got to the 10 basis points, and the QE that had been announced. And I think on the investment side, that will have to favour, maybe not in the very short term, but in the short and medium term, is going to favour all of us who borrow money to do what we do, asset-backed stuff. When the market settles down, we'll all benefit from those lower base rates, and QE has helped to inflate assets, arguably too high, but has helped to inflate assets for the last 10 years. So investors should be, relatively pleased about those steps. So going on to the employee, the furlough scheme, it was a new word to me, certainly. So there was plenty of Googling going on when that happened.
I thought it was supposed to do with horse racing, but I think I just got my terminology wrong.
Couple of letters out, probably, but there's 8 of them in a mile. Yeah, absolutely. There's 8 furloughs in a million, maybe. I don't know, but yeah, it was tight. I think you could tell that they had to really rush it through because employers were starting to panic. So bear in mind quite how many people work for SME. 90% of the economy is employed by SME, small and medium-sized enterprises. So whilst people like Google and Amazon get a lot of the headlines for obvious reasons, the reality is 9 out of 10 people work in small businesses and medium-sized businesses. So they had to come up with this support. And of course, the fact that they were doing it through PAYE and the fact that they went to 80%, I think, was seen as generous and positive. The interesting thing is, in these situations, because you've got a gigantic drop in demand that's being enforced by the whole coronavirus situation. So not just in terms of travel is obviously a good one, because there's absolutely zero business there right now at the moment. But it's all the knock-on consequences of all of the things that this impacts. Obviously, pubs and restaurants and cinemas, there's enforced no demand because they're closed. Excuse me. So that's the biggest demand shock we've seen in the economy by a scale factor of 10 or more ever, realistically, or certainly post World War II. So it's a huge it's a huge thing. And what would normally happen if you gave people if you stimulated the economy by putting money in people's pockets that otherwise wouldn't be there, which is effectively what it's doing, normally they'd go out and spend it. Now, at the moment, they're going to struggle to go out and spend it, and it's anybody's guess. We are not Japan's a really interesting parallel that can be drawn because they've had low interest rates for years. They've got a certain culture which basic economics tells you that people will excuse me. Basic economics tells you that people will save more the higher that the interest rate gets. But what they found in Japan when they introduced the very low rates was that they still saved lots and lots of money because it's in their culture as a rule to save, whereas it's in our culture as a rule to spend and to borrow to spend. So that's it's never as simple as the economic theory sort of leads you to believe. But there's one of the things which we might touch on is whether there'll be sort of long-term behavioural change on the back of this. But the way that some people seem to be scrambling around and some of the language that people have been using and some of the body language that I've seen in people suggests to me they aren't holding lots and lots of cash to tide them through an unseen crisis, which you can understand because I made the point to someone the other day that a lot of these, let's say, hospitality you know, it's hard being on the high street, being or having a pub, having a restaurant. There's big food chains that have had big high-profile failures, like Jamie Oliver, and there's lots of others like Prezzo who have entered into CVAs and things like that they're backed by big private equity funds. So they work on thin margins, and when those margins don't materialize, then they don't make any money. If you then lose 100% of your revenue overnight, for even if it is only for a period of 6 weeks, it might be 3 months, it might be who knows what it is. That's obviously a massive shock to your business. And I think if they hadn't made the announcement when they did, you would have seen even more layoffs than you've seen. But we do know, we're looking at things at the moment that are in the now. There's a thing called nowcasting, which a lot of economists are trying to get involved in at the moment. That's been popular for about the last decade, because we recognise as economists that it takes too long to get data out. And because this has moved so very quickly, it's more important than ever. This is moving at, I would say, 10 times the speed of 2008, if not faster. And things change by the day. Sometimes good news, sometimes bad news, and markets are reacting accordingly. And the people who invest in the stock market are smart enough to know a huge amount of QE and an extremely low interest rate is going to be good news for the big corporates who will get through this. But if you go back to the 90% of workers working for SMEs, I think you were getting to a stage where people were literally, even big companies I know, were calling meetings for Monday morning, potentially to lay off huge swathes of workers. But back to the nowcasting, we know that 500,000 people nearly registered for universal credit in 1 week last week. And that is a phenomenal spike that there's going to be. They're talking about unemployment very briefly touching 3 million before it comes back. Now, I wouldn't be too alarmed by all of that, because I think there's a big element to which we will come back up as fast as we went down. But I think we may come back up to maybe 75% of where we were, and then the last 25% will be much more painful. And we're going to see, as you can imagine, hopefully not too regressive taxation, but I think we'll see maybe VAT go up because it's a good way to raise money. We may just see income tax straightforward go up. It's very difficult for a government to do this, but a massive majority and an unprecedented multi-generational crisis is as good a reason as any for even a low tax, theoretically, government to get the tax rate back up to put some money in. So I think the idea that what I've seen is the high level employee scheme be really well received, as you said, including by people like me. The granular detail of it, now it's coming out that they're only going to back pay 3 weeks at a time. That starts from the 1st of March. We still need to see a lot of the mechanics of this, because cash flow is going to be important, and cash flow isn't necessarily going to be plugged by this coronavirus business interruption loan scheme necessarily.
Yeah, and actually, you mentioned there's a couple of things in there that I wanted to pick up on. But the first one certainly was what you said about culture, which I think is quite key. I've, like a lot of people, I've been doing these house party pub quizzes on a Friday night and all this kind of stuff, and everyone's talking about the coming out party. You know, once we're in lockdown, you know, we can all go out, and it got me thinking, maybe more so than some of the people I was sharing those pub quizzes with. Actually, what the implications of that are going to be, and it does show. I think number one, I think that does show that we are a bit of a spending nation. Money burns a hole in our pocket. So I'm just wondering whether, you know, number one, I think high streets around the country the first Friday and Saturday that we're allowed out are going to be like war zones anyway. So I might steer clear. But do you think actually that because of that culture that we have, that we like to spending traditionally does keep you know, economies going, and could actually the fact that as a country we like to spend money actually be long-term good for us, because everyone will come out of the lockdown and just want to get rid of all the money that seems to be burning a hole in their pocket that they haven't been able to spend for, you know, however months it would have been by then.
It's a good point, and I can't see that being wrong in terms of the logistics of how it will play out. What I see, I mean, you're quite right in what you say from the economist's perspective. The big things are consumption, investment, and government spending. Really, you can limit the conversation to those three things, and consumption is by far the largest of those. Now, they announced a huge amount of government spending on infrastructure in the budget. even though the budget was done. I think was it March the 12th? It was in full sight of well, maybe not full sight, but they had a good idea about the whole coronavirus thing, and they still wanted to commit to spend. So there will be the government spending increase bit, which will bring us back out of what will absolutely, certainly in name, be a recession. But the consumer spending part is the big part to attract. But how many high street shops that were hanging? I mean, what did you see very quickly? Laura Ashley, Carphone Warehouse, under the cover of coronavirus, were off quicker than anything else, right? It's nothing to do with coronavirus. Those businesses were hanging on. They either need to go online or just fold or do something different. Laura Ashley are involved in hotels now, and they see, I mean, maybe not ideal at the moment, but they obviously see that as a big pivot in their keeping their brand alive. Laura Ashley associated with luxury hotels would seem to make sense.
Yeah.
So that was just done under the cover of Corona, realistically. But I think the thing that concerns me that I've not seen much chatter about as yet is ultimately we already were living with a high level of household debt. So this has been mentioned by the Bank of England. I'm lucky enough to get invited to the Bank of England quarterly breakfast Midlands briefings once a quarter, and I always make sure to go to them. And the Midlands rep, I asked him once when I had the chance, I said, where is the governor at, which was Mark Carney at the time, where is the governor at in terms of the household debt bubble, car leasing? Obviously, before all of this, diesel demand shock downwards was a 10% cut. Now, I think in China they saw a 90% demand cut, only for a few weeks, but still, obviously, extremely damaging. Where's the governor at with the household debt levels? He said, well, do you know what? He says, the thing is, when you look at it in terms of the number of the actual amount that household debt is, it's not a giant worry. And a lot of this debt is at very low rates. And I said, yeah, but what about the long-term dependency on cheap credit, which I think we've built? And I think this has kicked that can down the road by 5 or 10 years, potentially, in terms of paying it back. So the governor wasn't worried in terms of the actual size of that. But obviously, if every household, let's say, even temporarily, takes on an extra £2,500 of debt to get them through this whole thing, then that's 2,500 times 30 million. And are banks going to want to come out and lend straight away? We've had this chat already. The initial reaction has been to put rates up and move LTVs down. The short and medium term reaction, I'm sure, is going to be to bring those things back down as and when there's some stability in the marketplace. But will we be seeing 3% personal loans come back very, very quickly? I don't know. It's very difficult to imagine it getting any cheaper very quickly. It might happen in the medium term, but if everybody loads up, if everybody's not everybody, but on average, everybody is already over leveraged as a household, and then you stack up an extra however many £1,000 on top of that, then you've potentially got an issue, haven't you?
Yeah.
Which is concerning.
I like the fact that you brought debt in, because obviously that's my forte anyway, and I know you've got a bit of an interest yourself, pardon the pun. But moving on to talking a little bit about property then, because obviously that is how we both know each other. I'm getting really, really differing views from lots of people in our sector about where our market is headed in the short, medium and long term. Really polarized in terms of whether it's negative or positive. I like to think from a debt perspective that lenders are going to act as quickly as they did to save themselves, for want of a better phrase, to lower LTVs, lower their risk profile essentially, and try and get back to pre-coronavirus levels of lending as soon as possibly can. I do think it might take a little bit longer because some of them might want to take advantage of the rates and lower risk profiles, etc. But from your perspective, what potential impacts are what we're going through right now with effectively the loan market for property kind of fizzling out at the moment, or at a standstill? What kind of long-lasting impacts can we see that happening on our sector, the property sector?
It isn't an easy one. I think the the long term for me sees what I think we will see in the next 3 to 6 months is that property will hold up relatively well compared to equities in the short term. So equities could take a bit more of a kicking. Like I said, there's all that QE and everything bubbling around, and we don't yet know about bailouts on airlines and whether the government will buy equities, whether it will fund it with debt, whether it will do nothing. But it's not going to want to see the airline sector take a giant shrink because it's a huge contributor to keeping the wheels of the economy turning. So they're going to have to do something realistically, and that will give more confidence back as well. But you don't tend to see, like, what did you see in the stock market very quickly? Round about 30% wiped off in a couple of weeks. Not every investor's got the stomach for that sort of stuff, and very few people have got the stomach to say, oh, it's down 30%, so I'm going to put some more money in. And property doesn't tend to do that. I think what you've got at the moment is a bit of a values gap. You've got a lot of big organisations saying that I think I've seen, the smallest I've seen is a 5% haircut, they think. The largest I've seen is a 40% haircut. I think that was Knight Frank. I don't know if Knight Frank are talking about the sort of stock that they sell at the very luxury top end, which you could understand, I suppose, if there's a deep recession. But as I say, I think we'll be in and out relatively. Remember, a recession technically is only 2 quarters in a row of negative GDP growth. I think you're going to see such a drop in GDP in Q2 of this year that in Q3, we will probably have a rise from there and the economy will technically be out of recession. Yeah. But it's not going to matter because there's still going to be a lot of pain at that point, really. Whereas with property, obviously, the beauty is you only have to, obviously it depends on your loan documents and covenants and all the rest of it. But generally speaking, for the majority of people who will listen to this, you only have to liquidate and realise losses as and when you only crystallise losses. When you sell a property. So if you haven't got to sell it, you've got a gap at the moment between prices and values. And if you, like many longer term investors, are holding a portfolio like I am, with lots and lots of 5-year fixed rate loans in it, many of which have got quite a long time to run on their terms, you haven't really got a major league worry right now, I don't think, because what are the problems that you've got? You've seen lenders act quite sensibly in terms of clipping LTVs, withdrawing saltier products like serviced accommodation because there's no market at the moment, or a different market anyway, certainly. You've seen them react quite sensibly. Those who have stopped lending altogether, it makes me concerned about what's in their loan book that's getting them particularly worried. And there's things going on there conversations that are certainly being had outside of the public domain that you and I would both be very interested in. But then also there's bridging lenders even on the other side who are backed by private funders who are still absolutely getting on with it and taking very pragmatic views. I've been offered deals that were not dissimilar to the deal that I was already on the funding line that's been paused on me in the last 7 days. Mm-hmm. But you've got logistical issues with getting valuers out. That how long will that last? That's difficult. I do sympathise with the credit risk guys, but I don't see, the shorter this time frame before the end of the technical recession, the fewer I see. I think Rightmove and Zoopla have been publishing, there's been about 60% less interest, and I think they're gauging that through people booking viewings through their online forms. Now, I think that's a bit of a misnomer because, of course, fewer people are going to book viewings, but actually you've kind of got Boxing Day repeated for the next 6 weeks or something, where there's so many people on the internet, there's so many people on Facebook. It's amazing. Being on Facebook at the moment is like being on WhatsApp because things are going around so quickly. It's like bang, 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 bang. It's unbelievably fast because so many people are spending so much time on it.
I've turned off my notifications
so there's still interest. Yeah, I've had mine off for years because it just got too ridiculous, but it's a good idea at the moment. I mean, our estate agency is still seeing, robust demand. People who've agreed deals want to move. People still want to buy quality stock. They're not seeing it as people are looking and saying, well, actually, coronavirus doesn't really impact my job that much. So I'd like to just carry on and get on with it. So the retail market is obviously so much bigger. What did we see in 2008? We saw the retail market take a big knock. because there are all these bad loans in there. Those bad loans don't exist anymore, as you well know. And therefore, you haven't got that sort of systemic risk in the loan side of things. You've got a logistical issue, and then you've also got uncertainty. And as we all know, all markets hate uncertainty. I'm sure you've seen, the VIX, which measures volatility in the equity markets, has been at all-time highs ever since the VIX ever began. There's been so much volatility, so that needs to calm down first of all. But we're still seeing, affordable first-time buyers and second-time buyers are not being discouraged by this at the moment, and we're having to say, well, it's going to be quite difficult to even do a viewing. So we need, we'll hold your interest, and we're still having people who want to come to market and do business in this environment. So I don't know if the property market, and of course those guys are retail buyers. They're doing business at retail prices, and if the retail market goes on, the investment market is effectively pegged to the retail market, because that market is doing 10 or 20 times as many transactions a month as the investment market. And if the retail market still remains relatively robust and things aren't done at 20-25% discounts, or you pick a number really, then this scar never appears on the land registry, and everybody goes, oh well, property, it held up pretty well. I think transaction volumes will drop significantly. I think they just have to. It might be 30%, 50%, 60%, I don't know. I don't think they're going to go all the way to suspending the land reg or anything like that. I think these sort of ultra draconian measures just don't have a lot of upside for the government's delay policy as far as the virus goes, and they're likely to spook the economy a lot more if they start doing these sorts of things. So I think they've been quite cautious they've got a horrible job in government, because ultimately they've got to trade off really three things at the moment. Number one, people who are going to die from corona, right? Number two, people who are going to die who would have had an intensive care bed if the intensive care beds weren't taken up by corona. Number three, ultimately the people that will die because of the economic impact of the economy going down. So this isn't really about money. This is still about the currency in those three situations is about human lives. And it's a really awkward conversation, and economics has no heart. So you have to be able to have that conversation. And of course, it has to be politically palatable as well, which is why, that you can find a million opinions saying they're going way over the top. They're not doing enough. There's a big scale of things. They're walking a tightrope is what they're doing. And they're swinging these huge, huge bats. So we've seen the grant scheme going to people who have small business rates relief. And I'm sure you might have seen there's been some chat on the service accommodation forums about people who've got 100 units that are all on business rates. Yeah. Are they going to get £1 million worth of grants, £2 million worth of grants, some of them? If they do, is that money going to go? Is that money going to the right place? Well, almost inevitably not. Obviously, you wouldn't think that if you've got 100 buildings on business rates, then I salute you. Well done for seeing that one coming. But it's the incidence of where the money gets to, and then back to your point about, will we see people consume in the economy? And because that's got to drive, that demand has got to come back and drive what's going on. So my fear at the moment, and I'm not really looking to big up Donald Trump in any way, but what I think is good about what the Americans have done quite early on is they've announced what we call helicopter money. So they're dropping money into people's bank accounts. Now, what it means is that money's already there. So it's getting rid of the cash flow problems that are going to creep in with some of the UK government solutions. And I mean, look, the self-employed who, let's remember, on average, earn about 34% less than people on PAYE. So self-employment is very often, I've seen a lot of negative stuff on the internet about the tax dodgers and this, that, and the other. But, self-employment is quite often about flexibility because it suits your lifestyle. It's because you've got other commitments, and sometimes you've got no employment protection. You've got to go, if you're ill, you still go to work. You're very fearful of your job. And a lot of those people at the lower end as well, they're living week to week, realistically, because they get paid week to week. So telling them to wait till June is a bit crackers, to be honest. And the cynic in me wonders whether they actually want those people to still be working. And I have read quite a good article today about one of the potential ways to unwind a lockdown, because obviously what you've seen in the Asian countries that have locked down is that it's extremely draconian, and it's like you stay in. If you don't, you get arrested, you get thrown in jail, you get your temperature taken at the airport, so you get all the rest of that stuff, right? And they've been very successful in keeping the number of cases down. What we don't know yet is whether there'll be a second wave, as they suspect, because that's the way that it all panned out with the Spanish flu. Actually, if you look at the Spanish flu, there were actually 3 waves over the course of 2 years. So it is a concern. Whereas I don't think our culture really allows that to be the case, and that's definitely a factor. But B, we don't know what the economic damage of those things will be. I know China's growth was set to be about 6% this year. They think this quarter they would have lost about 2% off their economy, even though they only shut down Hubei, which has got 65 million people in out of a 1.4 billion person economy. So, that's why they're talking about the English or the UK and the US GDP taking a 20 to 25% haircut very temporarily. But I think we will look. There'll be a lot of pent up. What are people going to want to do, Sam? Because they are going to have been supported by the government and their employers. I hope the vast majority of them. They are. It's quite difficult unless you're a bit of an idiot. You're probably saving a few quid at the moment for a rainy day, and you're not. And it's impossible to spend what you were spending if you had. I mean, one of the stats I learned this week was supermarkets provide about 60% of our food normally. So 40% comes through restaurants, etc., etc. And that's one of the reasons why the supply chain's struggling, because 60 has become 100.
Yeah.
So that's an increase of 66% overnight like that. It's not just panic buyers. There's a huge, huge glut of demand. And of course, that's happened in a lot of Western Europe as well at the moment. So if that puts into context just how much people like to go out, for me, how much in our culture do we go out, go to the pub, go out and eat, go out to cafes and all the rest of it? Now, the problem I think the holiday companies will see a lot of deferred demand. I mean, you won't be able to get enough people on enough planes. And I think you'll see, if we assume it takes 3 to 4 months to play out and we're allowed to then go out on holiday and stuff again, prices of holidays will go up, prices of flights will go through the roof. You'll see a lot of negative stuff around that, but people will, I think, mentally feel like they need a break more than they've ever needed a break because they're stuck in 4 walls at the moment. So there's the sanity side of that. And I mean, there's no way we've seen the end of the stimulus yet from the government. No way in a million years, not on a personal finance level or on a business level. So there's going to be more, and it's quite hard. I don't know how much money the average household is spending this week, but I would suggest it's down 25% plus, which, as you say, will fulfill. That's what's drawing the GDP down so rapidly.
I don't know. I've given my parents and my wife access to my Amazon account, so I don't know what their spending's happening to theirs. But it seems to be up.
Joking aside, though, even Amazon, you can't get Prime stuff that isn't essential at the moment. So even stuff you would normally think, well, I could do with one of those, Amazon's not delivering it at the moment. So
I've still got my mic, I think. So.
As long as that's something, they obviously realise that Game Alone's mic is essential, mate. Which is
well, I need to send them a letter, obviously.
But I think there will be money. I think at the end of all of this, there will be. I think your living expenses are probably down 20%, and if your average salary, talking across the average person in the population, if they're still collecting 80% of what they were, then there's not really an issue for them at the moment. But as and when that comes back, there'll be some companies who are in an inordinately good position because of this, because of grants, because of the furlough scheme, because of whatever else is going to come out. And there are some companies, I know I'm hearing some bad stories about some employees who are being forced to go into work and stuff, which is terrible. I'm also hearing some really good stories about good companies who are keeping their employees on full pay. So if you're on full pay at the moment, you're probably struggling to spend like you normally do. So that has to, like you said, the rubber band is stretching back quite quickly. All of that release depends on how quickly we get out of lockdown. But you have to think Boris will be.
Sorry, go on, Adam.
I was just going to say, you'd have to. I mean, look, Trump is saying Easter Sunday, isn't he? Which is absolutely nuts. but you'd have to think Boris will be more on the Trumpian side, listening to some more sensible statisticians, I think, rather than who Donald Trump wants to listen to. But they will want to get the, I think, like I said, the way you've seen the lockdown happen so far, have we got another ratchet on the lockdown? We will see that when sadly the numbers are getting up to 500, 750, 1,000 dead per day. That's when we will be able to tell. But I think at the moment, if you look at the difference between, I was watching a few things on iPlayer earlier today, and they were from sort of end of Feb, once a week, through to recently. They've paused the program because it's a live TV program with a studio audience, so they just can't do it. And it went through a mention of coronavirus. The next week they were elbow bumping instead of shaking hands. The next week, suddenly 3/4 of the audience had disappeared because they're all 2 meters away from each other. So that's how it was a good sort of measure of how much more seriously we've taken stuff. And I haven't seen this weekend so far, and touch wood I'm not going to see, is these photos of people at the beach, people in Snowdonia, people. So if we're learning, which I think, if we're as liberal as we can be and say, look, we are a liberal society, we do expect you to have a semblance of an idea of what to do. Do listen to the government and people like me who are shouting on their Facebook about it at the moment. If we're getting that, we maybe don't need a further, harder lockdown. And I think that will leave much less of an economic scar. And ultimately, that will filter through into saving lives, as hard as that is for some people to hear, especially if someone you know gets sick. That is the brutal reality of it.
Yeah. And you know, picking up on a few things that you just said there, you mentioned winners and losers potentially out of this, which whenever there's a crisis, there usually is. But also talked about America, and if we look at things from a bigger perspective, we start maybe looking into our crystal ball a little bit. Your history is in terms of your studies or in economics. Mine was in history, and one of the things that we talked about in history at the beginning of the 20th century and moving through the wars and stuff was the top table of sort of international countries and powers, and actually a topic that we discussed a lot was Britain losing its place at the top table, especially when we got into Cold War territory. Lots of discussions I've had is actually, you mentioned a few of them already. We've got a strong government, whether you like Boris or not, we've got a strong government. Brexit decision was made, which I think helped. We've still got, relatively cheap currency internationally because the pound's been down. We've taken a lot of measures economically and supportively as a country. Coming out of this, my not being an economist myself, and being definitely a glass half full kind of person, I kind of thought, well, has all of this that I've just mentioned meant that we could actually potentially regain that place at the top table? Because if we look at the league table of economic countries, there are going to be other countries that don't do as well. Italy, Spain, for example, Germany, to name a few European countries, maybe even America might drop down a little bit. Do we actually make up a little bit of on the race for promotion, if you like, and come out of this pretty strong from an international economical standpoint? And I know that's quite a big question to ask, but I you know what my mind's like. I think about these weird things, and that's what's kind of been running through my mind the last few days.
It's a great question, and I must say, ever since the sterling has obviously started to drift quite badly, I can understand its drift against the dollar, because this is a time when the whole world wants to be in dollars. It's the currency of the globe, rightly or wrongly. So a hard, strong dollar at this time makes sense. $2 trillion worth of stimulus, and we're still, like I say, I think at the start of the packages, is a big play for them. That's they've got a big economy, but it's a decent whack of their GDP. It's a big play. So how the dollar pound how Eurex will wash out, I'm not really sure. One thing that surprised me is the euro against the pound, because I look at the Eurozone like you and think, well, hang on a second, they were already at negative interest rates when this started. I mean, I know we were only at 0.75, but it was something. It was something that allowed a shot in the, a bit of monetary stimulus, or hundreds of billions really of monetary stimulus. ECB didn't have that option. A lot of the problems, you know, the Eurozone, I voted Remain, total declaration of honesty, but I was a relatively reluctant Remainer because I don't believe the construct of the EU will ever succeed in the long run. And I don't think the EU, I don't think its political ambitions are the best things for us in the UK. I just thought it was probably the best thing economically, and I was worried about the economic consequences. And I also didn't fancy Nigel Farage running the country, if I'm honest, which
That's fair
happily
enough.
hasn't happened. So I haven't been too perturbed since the referendum result, really. I've more got used to working out what I think is going to happen and then taking actions on the back of that. And I've done reasonably well out the back of making some decent plays since then. I think, you know, you know that, or I'm sure a lot of the listeners understand, you know, they'll remember the Greek debt crisis. It's not that long ago, the Eurozone debt crisis that we had. They'll also know, if they've done any decent amount of research, that ultimately the problems that Portugal, Ireland, Greece and Spain were having, and Italy, are not far behind at all, because although they've got a big old economy and an ancient old banking system and all the rest of it, they have got this gigantic demographic issue of lots and lots and lots of retired people. And that issue's been bubbling for the last 25 years. But of course, you can't euthanize them. So there's nothing you can do about population apart from allow mass immigration, which obviously is more of the Angela Merkel way of handling things. And obviously, they've not felt that would wash in Italy. But their economies, you've got a number of economies there already teetering on the brink. The ECB have already done things that they've said they would never do post the Greek debt crisis. They've already done them, like they do. The EU, like a lot of governments, changes the rules in these situations. And ultimately, I still believe, my core belief is still that the project is doomed to failure because they don't have a common language. They don't have true free movement of people. They don't really have all they have really is a common currency that masks how much better Germany has done over the last 20 years than France, Spain. All these other countries have been, you know, hampered by not being able to devalue apart from anything else. And if you let if you brought back the franc and the Deutschmark and all the rest of it, the exchange rates today would be bonkers compared to where they were in 1999. So I don't understand what's the realistic consequence of that. If I'm right, the Eurozone needs to prop itself up. The EU needs to prop itself up. And ultimately, if they need money, they're going to have to go to the Germans and the French, realistically, and or just print more and more bonds. Now, the German, obviously, the mark when it was around, and now the euro took on the mantle of the mark. It has that, you know, it is the second most well-respected currency in the world. It has a huge amount of credence behind it. But remember, Germany were already having a very flat time before we went into this issue. They were having a technical recession. France was not far behind. There were some of the smaller players in the Eurozone doing well. So you could easily, in my mind, I don't see them coming out of this very, very well, because they've also got the problems that, you know, ultimately what's going to be called into question here on the back of this. Well, free movement creates a problem. It's one of the core values of the EU. It's a problem because free movement means free movement of the virus. So how do you handle some of the Baltic states, for example, who had 3 cases of corona and then lock themselves down, right? That's not going to stop their country getting the virus unless they're going to lock themselves down for 2 years, in which case they'll do so much social and economic damage. There'll be a bloody civil war or something, realistically. People are going to need to move across those borders. What happens when they do? How do they then deal with that situation? Are they just sitting and praying and hoping for a vaccine? So you've suddenly got not even probably, you've got 27 member states of the EU all acting as autonomously as they've ever acted for the last 20 years. And they can genuinely see here that they have got to act differently, because Germany have gone about it the way that Germany have, and you know how much testing they've done, you know how few deaths they've had comparatively. But we won't be able to know, because everybody starts on a different day at a different point and different things happen. We'll only know after the event who handled it really well. You would expect the Germans to handle it reasonably well, just because they are, you know, ruthlessly efficient and followed the WHO guidelines to the letter. And what Boris has done is brave in that he's not followed all that to the letter, and it could be it could backfire. But it also could end up being a bit of brilliance. Everyone's walking a tightrope at the moment, but I'd rather be the UK as an island, which is one of the positive things is we stopped talking about the Scottish having another referendum to leave and all the rest of it. We have actually pulled together and said, right, we've got to do this, we've got to beat this together. Yeah. We've got crossbench politics going on properly, apart from Jeremy Corbyn, who is making the biggest, I won't swear, but idiot of himself that you could ever imagine with some of the things that he's saying. I can't believe it personally. And you've got lots and lots of good things about us being the now on our way to autonomous government that we are, really. So yeah. I'm quite confident that we will probably do relatively better, but whether we'll do absolutely better.
Basically, what I suppose the question that was asking initially on it was kind of where you see, if we look at the exit of this, whether actually the UK will have risen a number of places if we look at the world economic league table, whether we actually come out of this better than we came in, I suppose, which my feeling is we will, but maybe that's a mixture of some of the measures we've put in place, as well as, which are positive, as well as some of the measures that other countries might have put in place that maybe haven't been as good.
I think we'll see. We will, but absolutely we won't ultimately, because there has been value destroyed here, and ultimately, of course, there have been lives lost as well. So relatively we may do, but absolutely we won't, I think.
Fair enough. Well, look, I know we've been on for nearly an hour now, so and I know it's Sunday evening for those that are listening, probably later on in the week. So Zoom is allowing us to work all the hours that God gives us. But look, I'm really appreciative of you giving up your time, Adam. I know you've got your family around you and everything at the moment, but obviously, I'm a big fan of Partners in Property, and I wanted to give the network a bit of a big enough of an opportunity for you to talk about that a little bit. But for those that are in property and might want to get a bit more information on your awesome network, what's the best way of them going out about finding out about Partners in Property?
I think either friend request myself or Sue Sims on LinkedIn or Facebook, and come and look at our Facebook page. Also have a look at our website, partners-property.com. We're having a bit of a revamp done, which is not ideal timing because obviously things are working more slowly than they would usually, but people are still welcome to come in. We've been running online meets with 75 plus people attending, and been getting some great feedback from those as well. So we're doing more than we've ever done. We've got our WhatsApp groups being very active. We've got our Facebook group, our secret Facebook group, where we're sharing lots of stuff, and also doing some other videos. And we're going to be doing some Facebook lives from next week as well. So all very exciting. Drop me a message, have a look at the page on Facebook, drop Sue a message, come in and check it out.
I'll definitely make sure that all the links you just mentioned are going to be in the show notes as well. So anyone that does want to get in touch with you and discuss any of the stuff that we've been talking about, I know an hour isn't that long in the grand scheme of things. We probably could have talked about this for days, but I'll make sure that anyone that can or wants to get in touch with you can, Adam. So all that's left to say is thanks ever so much for your time. Stay safe, and we'll catch up again with you soon. Hopefully, when all this is over.
Thanks, Sam. Same to you and yours. All the best. Take care.
Cheers, mate.